The second presentation is going to be by Bob about Everest. Everest is a company that has been working with tokenization of precious stones since 2018. I'm not sure if Bob is going to talk exclusively about that because they also have some other products. I am very curious myself, and it's the first time that Bob is here. So 2 presentations, each one with a Q&A. Richard is going to be the DJ and your presenter. Everyone, welcome to Richard.
Yeah, thank you very much. And thank you for the intro. Wait, let me just see if I can get this thing to work. Wait. Sorry. Oh, sorry. Okay. Yeah, I just saw that it was connected there. Yeah, sorry. All right. Okay. Yeah. Extended. Okay.
I want to say that this is of course part of the charm because in 3 years of Crypto Hub, I do not remember one single event that we hosted here without some technical issues.
Yeah.
Today the speaker did not explode. However, we have some minor issue with the projector. We're just going to fix it. In the meanwhile,
Oh, all right.
I have one more question for the audience, and maybe if you're lucky to answer that question correctly, there might be a little reward for you. Now, who here can tell me what money is?
Okay, perfect.
Who knows what money is? What is money? We don't have money. Yes, that's right.
Sorry.
Theoretically, if you would have some, what would it be? What is the definition of money?
Yeah.
Nobody knows?
To the right, okay.
Hit it. Go.
So it is a notion, an idea, either in a physical form or in a digital nowadays, that usually serves 3 purposes: store of value, unit of account, and medium of exchange.
Mister, you're smarter than me. That's right. Congratulations. You get a coin 360 hat. This one goes for you. Congratulations. Money is, what the gentleman is like elaborately defining, very sophisticated. Money is what we accept as money. That is money. If it fulfills the store of value, easily transferable, easily protectable, scarce in nature, those are like very advanced definitions. But money fundamentally is what we accept as money. Once upon a time in Malta, gold was accepted as money. I guess it still is accepted, but it's not very handy. I cannot go to the supermarket and pay with 2 grams of gold for my groceries, but I can pay with euro. But euro is then also questionable because it has an unlimited supply, because the Central Bank of Europe in Frankfurt can print money. So money is what we accept. And if any of you accept Bitcoin as money, that is money now. So well done. There we have money.
Here.
Richard is ready, and here we go. Looking forward to the presentation.
Yeah. Hey guys. Yeah, some of you may know me, some of you may not know me, but yeah, my name is Richard, and well, I'm a DeFi degen, and yeah, I have been in crypto for a few years now, basically since DeFi. I mean, actually, I invested in Bitcoin in 2015, I guess, but DeFi only came around at around 2020, I think. It was like DeFi summer. And yeah, like today I'm gonna present you like Spectra Finance. It's a yield tokenization protocol. It's yeah, it's a big word, but what does it mean? Yeah, basically it means that that if you have like a yield-bearing asset, think like I don't know, like you have a stable coin like USDC, you deposit it into Aave, you earn yield on top of that. Yeah, and what we do is basically tokenizing the yield and separating it from the underlying. in a way that that users are actually able to buy a fixed yield product. So this is the general idea, and today I just want to give you like a demo how it works. Like Spectra Finance is live on a couple of chains, like as you see here. Like right now we have Ethereum, Arbitrum, Optimism, Base, and Sonic integrated. Like just some, let's say, some EVM chains, and yeah. I just show you how it works, because then it gets like a little bit more easy to understand. Wait 1 second. Where's the? Okay. Yeah. So basically, what I just did before coming here, like I went to Binance. I cashed out 1,000 USDC, or cashed in, other way around. To showcase that, so bridged it over to like via Stargate. This is a bridge. So generally, like when you are engaging with DeFi directly, because I'm not sure if you like how many guys here are actually like using DeFi or are just using centralized exchanges, but yeah, so basically, like the first step that you have to do if you want to participate in the DeFi ecosystem is that you have to get your assets like on chain. And so this is what I did. Withdrew it from Binance to Binance Smart Chain, bridged it over using Stargate, which is like one of the largest, or probably the largest bridge. Like Layer 0 is the largest bridge. Like, but I mean, they use Layer 0 in the back end, bridged it over to Sonic, like as you saw here. So it's basically just do like a little bit of clicking. And what I'm going to do now as the first step is like, and USDC is probably, I think it's the second biggest stable coin right now, owned by an American company. And so what I'm doing now is that I'm going to deposit like the 1,000 USDC inside rings. And yeah, I chose this one because because I saw some attractive yields on that pool before. Let me just do that really quick. Voila, confirm. Yep. And so now going to Spectra. So like how can you imagine like a fixed yield thing to work? So I mean I said before that we are splitting like the interest bearing token, for example, like a USDC that is yielding something into two different parts. So if you want to do that, also like the cool thing is that it's permissionless. So it's similar for similar to like how you create the Uniswap pool. So people are able to like permissionlessly just deploy it, like if they feel like it. And what you can then do is, I mean, I can also just showcase it here, right? That you have like some yield-bearing asset. I don't know. You can, like, if it's not listed here, you can just put like the token address, whatever there, and then like create a pool yourself. But yeah, like this, I think I just overcomplicated. I will show you like how it works. Here on like this is basically all of the assets that are there currently with varying degrees of liquidity. And but so if you want to I don't know, like if you want to earn a fixed yield on your asset, like whether it's a stable coin, if it's Ethereum, if it's, I don't know, like some other product, then you can just go here and you don't get any information. This shouldn't be like this, of course. Let's just do the one that I used before. Okay. Well, basically, what I'm going to do now let's explain how this works. Can everyone see? Like, yeah. So basically, right now, I just deposited like 1,000 USDC in this rings protocol. It's roughly worth like $1,000. And what I'm gonna do is fixing in the yield. So what happens here is that this pool has a maturity on June 30th. So it's like 2 months or something, and yeah, yeah. I mean that's basically it. So like this is what you this is kind of like the guaranteed rate that the protocol can give you. Like so basically on June 30th, like I will put my assets there, and then on June 30th, and also like later if I don't claim it directly, of course, I will just get this out. So I mean it's a pretty straightforward thing. So now I'm just gonna click fix rate to switch the network. Ah, maybe that's why it didn't show the info. Okay. Just go to my wallet, sign a couple of transactions. Yep. Et voila. I mean, it's not an exciting demo, I guess, but like this is like one of the ways how people, if they really take their own, let's say, if they want to take finance in their own hands, like this is like one possible way to engage with it. I mean, not necessarily this pool, not necessarily like this protocol, but of course, like if you want to use it, like you're all free and welcome to use it. But this just gives like many people like the opportunity to engage with it, and like this is just let's say like the most or the easiest way to engage with it. I mean, like in let's say the thing is, like you guys may wonder, is like, but okay, yeah, where does the yield come from? The yield comes from basically from the underlying strategy. Now, in this case, it comes from the SCUSD strategy, like from rings. But like I will stick with the example from Aave. It's like comes from Aave, and the next step is, yeah, but how do you hedge the risks? And basically we do this with a financial option. So it's getting like DeFi is getting more and more complicated. But basically if you want to lock in the price, yeah, there's a so-called yield token, and with this yield token, it kind of captures the yield volatility. So basically, if you have there are some traders, some liquidity, or yeah, more liquidity providers, and like they take on the risk kind of, and so they can guarantee it. Yeah, and it is basically guaranteed. Also, like if you think about it, it's like there's no real magic going on, because like let's just stick with this. Let's just stick with this example. Like you put in $1,000. Those $1,000 are like yield bearing, and like it doesn't change. Like there's no Ponzi or something involved. It's just like the strategy. But what we do is kind of, okay, we split it in between like the guaranteed fixed rate and some options that where some users think, oh no, I think it's the yield is, I don't know, it's too high right now, so I'm gonna short it, I'm gonna sell the yield tokens, or oh, I think the yield is going to pump, I'm going to long it. And so it's so basically offsetting that or giving that risk to the market. Yeah. And I mean, there's you can go like really deep on the how do you trade those yield tokens, like what are like strategies there. But I think like for consumer facing or retail facing thing, this is like Yeah, probably like the most relevant one, and I mean also like the returns are not crazy, right? I mean it's kind of crazy. I don't know, like what did it say before? Like $23, 24? Okay, 34, 34. So basically, I mean, okay, that's already quite good. I mean, I put in $1,000, and so not in 2 months I'm gonna do like what 3%? Yeah, 3.4%. So that's I don't know, like an annual APY of 12, 13, something like that, and 13.6. Thank you, man. Yeah, and so like it's an easy way to yeah to engage with DeFi and not necessarily leave money in a bank account. I mean, you can still do like whatever you want, of course, but just one way to think about it. Yeah. Thank you. Questions?
Hi, Richard. Awesome. What is your involvement with Spectra yourself?
Sorry, my role? Involvement. Yeah, basically, I support Spectra in BD, governance, and strategy. So it's yeah. I mean, I only started working there like 2 months ago, I would say, and was also like the story behind it was that that one VC, I don't know if I can name them, basically reached out to me and they said like, hey, there's a young cool team from France and they are looking to scale. Like they have like I mean right now Spectra has like 100 million or something in TVL, not in assets owned, but something like that, and looking to scale. And I was like, yeah, sure. The vibe was good, pretty cool team. They're all also. I mean, I'm 31. They're like most of the team is like 25, so it's really cool. Like, yeah. um,
Any more questions? Up with the hand, and I come with the microphone.
Great presentation, very interesting product. What are some of the underlying risks one needs to consider when going into these, I guess, trades?
like, do you mean like risks in the sense? I mean, okay. Like the biggest risk is always the protocol risk. So I mean, for example, like here. I mean, I wouldn't say I'm going pretty degen on this one, but you always need to wait. Let me just. Where's the? Ah, here. Like if you, for example, look at the. Let me just open up. Like, why is the? It's not okay. Um. So so basically. When you look at those pools, they're like always you can see like the underlying asset USDC. So you always have to think about like various risks. One of the risks is of course like the risk of the stablecoin itself. How safe is the stablecoin? Like who issued it? Is it even backed? Stuff like that. So this is like the first layer of thinking about it. The second layer, and I mean like USDC for example is like one of the safest ones, and like I mean it's owned by Circle, where I think BlackRock seeded or co-seeded them with like $400 million, like I don't know, like years back, and it's like one of the fat coins in a sense. But I mean like they have like high security standards, they have the capital requirements, and so it's generally considered as one of the safest stable coins. Then like and I mean like then there's like too many to look at, but like you have to kind of assess the risk for the stablecoin first. Then the next step would be like the underlying strategy. So like Spectra is a protocol that is built on top of or can be built on top of other products. So this is like kind of a cool thing because so basically we have something like Aave, like a lending and borrowing protocol, or like this one is built on top of a curve pool, like a stable pool between like Aave stablecoin and Resolve stablecoin, and like it's a very very composable product where you that you basically can just build on a lot of different things. Then you kind of have to assess like how risky is the protocol where you're deploying it on. So there are like varying degrees there. I mean, back in 2020 and 2021, there were loads of protocol hacks, and I mean, they also do happen like from time to time. It's not as doesn't happen as often anymore. Then yeah, you kind of have to look at those risks, kind of assess it. I mean, like a general good metric is how long has the protocol been around? Has it been exploited? Yeah, stuff like that. And yeah, and then I think that's mostly it. I mean, there's also like, I mean, you can go into nuances. So, for example, like if you look at, because you are inheriting risks, the more protocols you stack on top of each other. So, for example, if you just have something like USDC on Aave, it's just, okay, you have the USDC risk, you have the Aave risk. But if you look, for example, at something like this, GHO USR, you actually have five protocols involved in that one, because like GHO, it's the stablecoin of Aave, like of the biggest lending market in DeFi, or like decentralized lending market, which I would say is low risk. USR is from Resolve, and honestly, I'm not 100% sure what they are doing. I think it's just a wrapper, but I have to look more deeply into it, but like you have the resolve risk, so you kind of have to price that in somehow. Then this thing is actually not just the underlying assets, but they are paired in a liquidity pool on Curve. So it's not actually just the underlying, like each underlying separately, but they're like traded in a Curve pool, so you can always swap from GHO to USR and from USR to GHO. And then this entire thing is like kind of glued together into one product, which is called into one like vault is what you call it, from Yearn Finance. And yeah, and like those are like all of the layers of integrations that go in there. And then and I mean, this is like the next funny step. And then of course, like we have this this Yearn vault, and then we split it up again into different financial products. So it's like yeah, layers on top of layers. And also, like as you can see here, like there's a saying in finance, and it's not just a saying, but that basically the higher, or like the more risk you take, the higher the yield, or like it's like always tightly coupled. And I mean, if you, okay, like this is probably not the most accurate one. It should be positive. Not sure what went wrong there, but in general, like the safer the assets, the lower the yield, and the yeah, the higher the yield, the higher the risk. Is basically what I'm saying. And so, like here, you have like a lot of yeah, compounded protocol risk. Though I have to say, like most of the protocols there are like battle proven. So Yearn has been around since DeFi summer. Curve has been around since DeFi summer. Aave has been around. Like they're like all already like.
Richard, I think we understand that this is definitely for sure not a Ponzi scheme.
Yeah, sorry for
and
that.
you are very open about the risk that people are getting exposed to in Spectra. Yeah. Richard is going to be around later for in-depth questions about the risk that is layered with Spectra. Thank you very much, Richard.
Yeah.
Thank you very much. We have to continue because we are going to wrap up around 9 p.m. and that means Bob has about 20 minutes to explain us what he is doing at Everest, and also there's an opportunity for question and answers. Everyone, welcome Bob. We have to again have some technical issues. We're gonna swap around. I think I am going to take this little opportunity where we are just dealing with some technicalities once more to thank our supporters. So we are Crypto Hub Malta. We are an association that, by the way, if you want, you can join. We have the membership forms ready if anybody is interested. We are a non-profit and we have some partnerships with different companies that are supporting us. One of them is WH Partners. They are crypto lawyers. If you have any legal troubles, you can go and talk to WH Partners. They have been helping us, and that means they can properly also help you. There's also Simply Staking. It's a Maltese blockchain infrastructure company. If you are a talented developer, go talk to Simply Staking, and they are also offering staking services that Spectra for sure is building the yield protocols and the yield pools on top of. And last but not least is the Bit Research. They are doing blockchain research, and I think they're actually here. Guys from Bit Research, are you here? There's Fran from the Bit Research. Thank you very much for making these meetups possible.